In this video, guys, we'll look at my favorite reversal pattern. Stay tuned. Hey traders, warm welcome to, all right, so this is one of my favorite reversal patterns at the moment. It works very well with stocks. It's been working very well as well with the indices. However, slight subtlety with the indices, I like to, or I prefer to personally use a regular trading hour session. Now, if you're spread betting the Dow, the S&P or NASDAQ, you can use QQQ, SPY will be for S&P 500, QQQ is for the NASDAQ, DIA is for the Dow. It's an ETF that tracks those. So if your charting provider doesn't easily allow you to separate them down into regular trading hours, let's say using a spread betting company, and you look at the charts from there, look at a 24-hour session on the Dow. If they give you access to these ETFs, they give you a good approximation. So you can kind of use this technique, if you like, by using the regular trading hour session. Wow, I've got off on a tangent there, but hopefully that makes some sense. It's the regular trading hours that I think are important to this, and it'll make sense in a minute why I believe that. So we're talking about reversal pattern, talking about from the downside to the up, and you know, I like to use this in strength generally. I think if you're using this in a range, you've got to be careful because it can become null and void. So what you're basically looking to do here is this. You're looking for the continued pullback, and by the way, let's put this in context. That should really be in the context of a larger trend. So it's a pullback. You know, okay, how can I time this pullback? So I like to use this 2-day rule. This is nothing revolutionary. It's the same kind of thing we've been doing for ages, but it's, you know, pretty effective at the moment. So I thought I'd share it with you guys. Is okay, we have day one, and there's a low of the day put in, and maybe it's closed at the low of the day, or maybe it's closed just not off the low. We don't want a really horrible candle that closes at lows. I don't really like that for day one, but just a normal candle, something like this, right? You got a red body, you got a low, and then it kind of closes just off the low, or even if it closes in the midpoint, that's fine. Now that's just normal as we'd expect for a downdraft. But the second day, so let's put this as a day one, and the second day here is day two, and that's just a slightly different. I'll show you the subtlety of differences in a second. So day two now probably opens, you know, near the close of yesterday. No major gap, just pretty similar as you kind of got here, closes with no major gap. There's no real change overnight in sentiment. Then it penetrates through the prior day's low. Not by huge amounts. I don't want it just kind of ripping right through, but enough. But then it finds a bid under that low, and it recovers back through that low. So it starts to creep back up, and it closes near to highs. Now, two things have happened here. One, the previous low has been rejected, and two, we've closed at highs. Now, in the right context, you can make a little bit of an assumption and say, okay, there's potential here. This is a reversal. It's potential that this might have a further couple of days worth of bid. Is it going to reverse completely? Don't know, but there's some short-term strength there because it's rejected that low. And the best thing about this trade, guys, is that you can structure your risk under the current day's low. So, and by the way, let's just say you've got a couple of options here. One is it closes in the body of the prior day, which is here, or even better, it closes above the high. That's super good. From a strength perspective, but it slightly skews the risk-reward ratio. But again, personal preference on how you want to take that. Anyway, so the point is this: you've got this, and there's a couple of ways of taking this. And by the way, just a reminder, in the context of a broader trend on a pullback, not interested in you trying to find the low of a downtrend with this, because you're going to get these all day long, and they're going to be false signals. You're assuming when you're buying a pullback in. The difference in when we're trading in the uptrend on a pullback is that we're waiting and assuming strength is going to continue. We're just looking for a signal that goes, yeah, I'm going to continue, or good chance of continuing, take the deal. So, two ways of taking this trade. The first one is if you are at the screen intraday during the trading day, is you can take this trade as it comes back up through the low. So, you know, in this example here, here's our low. You take it as it curls up. So imagine, you know, this is the prior day here. Then we open, and then this is day two. It comes down and it starts to come back up, and that's just kind of just digging into those candlesticks. There's your low. There's your entry here. Now you might want a little bit of room to breathe, not right on that low. You might say, okay, give it a little bit of room, give it a kind of a bit of an ATR, 10% of an ATR, or just something, or a few ticks, or 20 ticks, or whatever it is, or trading in the reasonable order of magnitude, so you're not just right on it. Then your entry here is long, okay, and then your stop is under that low again with a little bit of width. Don't have to do too much width because the whole premise is that it's not going to revisit that. So you've structured your trade quite nicely. You'll see, okay, there's my stop, and you know your reward can be, right, well, generally what I will do is that if it closes at highs, I'll hold it till the next day. If it doesn't close at highs, I'll review it and say, okay, what's going on? I won't generally look for a target in the first day. That's a personal preference because I'm probably trying to hold this for a couple of days worth of momentum. If that's a genuine reversal pattern on daily, I don't want to throw it away on day one. So if it comes back and stops me out, fine. If it closes at highs, I'll hold it for day two and then reassess and formulate a kind of exit strategy from that. Where could it go to? If it's closing in the midpoint, I'll make a judgment decision on the day. So that's that. That's one way of doing it, and my preferred way of doing it, generally speaking. But downside is, of course, I know that many of you aren't on the screens all the time. You can set an alert that helps you out. That's one way of doing it. Set your pending order as well. Difficult when you don't know how low that goes, but there's ways around it. You'll find a way. Okay, the other way of getting into this is to, as you're probably thinking, is, okay, well, I'll take it on the close. Perfectly valid. If you get a closing candle that matches that pattern, you say, right, I'll take it on the close and I'll just put a stop below the low. Now, of course, the downside of that is the risk is much bigger. The upside is that you've seen that confirmed strength, but of course the risk reward structure cannot be as nice as you'd like. I mean, if that's quite a large range candle, and really you kind of look at the ATR and say, well, even let's do some numbers. Let's say the ATR is 100 points. Let's imagine we're trading the Dow here. You're saying, oh, I want a 3-day move, 3-day stretch. You want to come out after a 3-day run because I think that's just short-term spring being stretched. That's all I'm trading for. You've got a 300-point target. If that was an excessively wide range day, all of a sudden it was a 200-point range day, you got a 300-point target, it's probably not worth taking. You know, so that's the downside of that, but you do obviously have more confirmation. Now, of course, if you've got a higher target, that's fine. You might be like, hey, this is going back to highs, 1,000 points away. I've been looking for this for a while. I don't really care what the width of that is. I'm happy to use that as a stop. It's the structure I like. It's within the broad, longer term uptrend. It's pulling back. The duration of the pullback is fitting my parameters. All those other things that you're going to look at and assess before taking this deal, take it, bang, and then you say, okay, whatever stop is, the stop is. But that's the downside of doing that if you're not trading intraday. Anyway, guys, that's my current favorite reversal pattern. Let me know what yours is in the comments section below. Give me an idea. Maybe I'll kind of dig into it and we can do a video on it, because, hey, you know, there's plenty of other ways to look for reversals, plenty of other ways to find stuff, but I do think that at the moment that's reasonably effective. So take care, see you next one, bye-bye.